Hello, everybody, and welcome back to another Money Moves. My name's John Cleaver with the ever awesome Wendy Lee. Hi, Wendy.
Hey, good morning. Happy Tuesday.
Hey, it's that's right. It's Tuesday, and that means we're here for another Money Moves to teach you how to make money moves for you and your family to put yourself off in a better financial place, showing you how to make more, save more, grow more, and then obviously protect the empire that you have built. So
Mhm.
today we've got an exciting topic. So September is Life Insurance Awareness Month, and life insurance is part of any good, solid financial plan. And so we're going to talk about that a little bit, but we're going to talk about how you may think about life insurance maybe not be the best way, and what the top 1% of earners in the US, how they use life insurance. So we're going to get started here in just a few seconds. So grab a pen and paper and let's get ready to make some money moves. All right, we're back. So, yeah, Winnie, let's talk about life insurance. Exciting, right?
I know it seems like the most boring subject, but the more you learn about it, it's kind of interesting. I
Yeah,
think.
it can be. I mean, you can do a lot with it. I think a lot, a lot more than most people realize. A lot of us think, well, I've got life insurance through work, or I got some, policy when
Mhm,
I was a kid. My parents got me, for 15 grand or whatever the case may be. But
mhm.
really there's a whole lot of there's a whole lot of noise about life insurance, but there's a whole lot of, I guess, just lack of awareness on what you can really do and how much of a dynamic financial tool it is, as far as building wealth, protecting your family, protecting your assets, protecting you from taxation, all kinds of things. So when people talk about life insurance, what's the first thing that you think of?
Burial, funeral expenses, or actually even before that, typically if you die young to help take care of your family, that's probably the first thing I think about.
That's good. Most people don't even think of that. I mean, they think, okay, well, I'm going to need 100 grand. And for, let's just be honest, for working class, everyday Americans out there, making between, call it 60, 70,000 to 150, plus or minus somewhere in there. Wow, I've got, a couple $100,000, or maybe I do, one X of my income through work. My wife's doing the same thing, or my husband's doing the same thing, and you think, wow, I may be set, right? The other thing is, listening to the gurus out there, talking about buy term and you don't need anything but term, is a horrible mistake. So let's kind of break those down a little bit. So the first thing, looking at how much do you actually need, and it's different for everybody. There's not a magic, pill out there that one size fits all. Same thing with financial planning, right? But you look at, what is it supposed to do? Well, I like to use the analogy that life insurance steps in when you step out, right? To
Yeah.
take care of your responsibilities and things like that. So you look at what we call the dime formula. Okay. And that's going to be, all your debts are paid off. That way the surviving spouse or partner isn't left, kind of holding the bag with all your debts. It also is income replacement. I mean, especially, when you made the comment, if you're young, you've probably got 20 years, 30 years of income coming into that household that's going to be gone now.
Yeah.
Not that you need to go out that far. Usually we look at 5 to 10 years of income replacement, about 75% of the income, because you're not there to spend any money, but that's a big piece of it. Lastly, or, the M stands for mortgage, to make sure the house is free and clear. So if you do have young kids, they're not only losing a parent, now they lose all their friend network and everything else, because they've got to sell the house and move because mom or dad can't afford it on their own, because most of us are dual income families. And then lastly is the educational needs and final expense.
Mhm.
So basically you add all those numbers up, and that's kind of what you need, right?
That's it. But not all what everyone thinks is everyone, you know, thinks term insurance. It's cheap. You know, the gurus say that's all I need. So,
Well, and
um,
that's true. Yeah,
yeah.
and you look at that and it's like, okay, well, why would I need it? I heard, permanent insurance is expensive and stuff like that. Not
Mhm,
really, depending on what you set it up for.
mhm,
And, you look at the average term policy is going to be 20 to 30 years. Less than 2% of those
yeah,
policies actually pay a death benefit out.
right.
And so if you're paying, call it $40 a month, you do that for 30 years or even 20 years, that's a lot of money that you just
Mhm,
spent and literally you get nothing for it,
right.
other than the peace of mind. And that's important, don't get me wrong. And that's really where you start looking at, okay, well, how do I design an insurance strategy, which that's exactly what it is, a life insurance strategy to really kind of protect my family. And that's where I like to use the house foundation. When we're younger, we've got a lot of debt, we've got
Mhm,
young kids, maybe a lot of expenses, things like that. That's your formative years, right? That's when you're coming up in the world, moving on up, as the Jeffersons used to say. And that's where there's a lot of expense that you've got to kind of protect against if something
right.
happens. And that's where your term insurance comes in. But that component of the term insurance needs to be built on a foundation of permanent insurance. So
Mhm,
the question is how much, right? Well, that's different for everybody too. And you can use that permanent insurance. And why would I want permanent insurance? Well, let's play out that term scenario, right? What
mhm.
happens, Wendy, if I'm 30 years old, I buy a 30-year term policy, and here I am at 60 now, still pretty healthy. What's going on?
Well, if you want insurance again, it's going to expire. And if you want insurance again, you're going to have to qualify at age 60 in the health that you are at 60. It's going to be way more expensive. And you're not gone yet. And you might have kids and grandkids that are, you want to leave money to. And you might still be working at 60, right? And not
Yeah.
even have that big wealth built up. Um, and so, yeah, it's a lot more expensive at that point.
Well, and that's most of it, right? Most people have realized that they're not retiring at 60, 65, or
Mhm.
even 70 anymore. They're wondering if they're ever going to retire at all. I read a comment last week in an article that 78% of us are still living paycheck to paycheck. That's including, older people too.
Mhm.
And last time I checked, we're not getting healthier as we get older, we
Right.
get less healthy.
Right.
Right. So even if you can qualify for that term insurance policy again, you're not going to get that 30 years at $40 a month or whatever again. You're going to get maybe a 10-year at 3 or 4 times the price if you can even qualify for it. And that's because the actuaries at these companies know that less than 2% of these policies actually pay out, and they don't want to pay out. They
Right.
will, don't get me wrong, but they're playing the numbers just like we are. And that's where, you look at, okay, well, what about this permanent thing you were just talking about, John? You know, a permanent policy is going to last literally through the end of days, right? End of your days. And you can set it up where you can pay a premium. I see a lot of final expense where, instead of having your kids go to the GoFundMe route and plaster your picture all over the internet, asking donors to give money to have your burial, why don't you set up, the financial? That's a little bit of tough accountability there, but set up some kind of final expense. And that's typically you're going to pay a premium through the end of your life, right? But a properly structured permanent policy is going to allow you to stop paying when you retire, right? So
Mhm.
you put money into it, it grows cash value. It's going to last until age 120 is typically when they schedule them out. Most of us aren't going to live to age 120. If you do, everybody's going to want to know what your book is so they can read about it and you'll make money that way. But you look at that permanent policy that really is that foundation. You can do so much more. And this is what the top 1% are doing. They're using life insurance not as a death benefit. That's almost like the bonus
Yeah.
piece of it. But looking at, I want to grow cash value. I want to have access to that. I want to have, protection from taxation because you can access that tax free, right? The way
Mhm.
those are structured. In most states, it's protected against lawsuits. So if something happens, you don't have to worry about losing that. And so there's a lot of benefits. And just like term insurance, that death benefit piece passes on to your heirs
Mhm.
tax free,
Yeah.
right? So there's a lot of different bonuses to it. And that's really, I mean, wealthy people are not using 401ks to build wealth, folks. I don't know if you know that or not. And it's the same thing with life insurance. Wealthy people are not using term insurance as their sole strategy. They may have some, Whether it's for a business deal or key person policy or something like that. If you're a business owner, you know what I'm talking about. But they're using permanent life insurance strategies, but there's so many more ways that you can structure it to where, net cost to you is almost zero.
Yeah.
And, when you say, wait a minute, that doesn't cost, no, there is an insurance component to it, right? There is a cost component to it. But when you look at what am I really concerned about? Am I concerned about the cost or am I concerned about the value that I got for that dollar that I spent?
Right.
It far outweighs anything that term can deliver for you. Because again, less than 2% of term policies actually pay out. And you can Google that, verify that. And if you see anything different, let me know. But what are your thoughts on all this, Wendy? I feel like I'm doing all the talking today.
You are. That's okay. You're the expert here. I just want to talk about real quick 2 books that I've read that really kind of opened my eyes to the wealthy using insurance differently. And one we actually did in our book study with our company, but what would the Rockefellers do?
Mm-hmm.
And how they use life insurance and trusts to continue building wealth generation after generation instead of depleting it. Like what the Vanderbilts, I think, lost all their money because they just spent it all in the trust. And that was fascinating. And then there's a book that I read called Die with Zero. And I'm not like 100% in line with what he says, but he basically says, like, use your money in your days that you're living and enjoying, like spend money appropriately based on where you are in life. And, if you want to give money away, give it away when you're living so you can enjoy, giving the gift. And then to create wealth for future generations, use life insurance. And when you set that up when you're younger and healthy, then it's way more affordable than right as you get older. But yeah, there's so many different things out there talking about leveraging life insurance. And it's something that people have to like dig in and learn about and not just trust your average financial guy or right.
Yeah. Well, and that's the reality of it, right? You've got to educate yourself again, and Die with Zero. I haven't read that book. I'll definitely have to put that on my read list. But another book that I really like, and it's super skinny, but it's just powerful in the information that it contains, is called Money, Wealth, and Life Insurance by Jake Thompson. Money, Wealth, and Life Insurance by Jake Thompson. And that talks about how not only do the wealthy use this strategy for life insurance, but also banks. And how many, not millions, but billions of dollars in assets that banks own in what's called BOLI. Companies do it too. It's called COLI, corporate owned life insurance. BOLI is bank owned life insurance. Why do they have so much money? How many billions do they have invested in life insurance? Why? Well, this book explains that and how you can do it too at whatever level. And it's something that it's a strategy that anybody can use. I'm a huge fan of it. I've got multiple accounts myself, but it provides so much more than just the life insurance. And that's really what life insurance awareness is all about. Don't get me wrong, folks, protecting your kids. If you've got young kids, you need to make sure that your family's protected because you never know when something's going to happen to you. Okay. If you've got assets, that's something that you need to protect, right? If you've got a spouse, a significant other, if you're taking care of your mom or something like that, maybe they're elderly, they depend on you. And that's something that you need to handle your business. And, for you parents out there, again, talking about the children getting an estate plan, even a, simple estate plan, make sure that life insurance is part of your financial plan, as well as, how much do I need and what type. And I'm not just talking whole life. I know a lot of people are going, oh my gosh, he's talking about whole life. Me personally, unless it's a small final expense policy, I'm not a big fan of whole life, especially to build wealth. I mean, if you get excited about a 5% return, okay, let me run some numbers for you. That's all I'm going to say. So, and don't get me wrong, 5% is not bad, but when you start looking at inflation at 4 or 5%, you're kind of breaking even.
Yeah.
And that's not really going to do it for you throughout your retirement years. And that's what all this is. It's not the assets you're living on from this stuff. It's the money generated, the income generated by these assets. But looking at what life insurance is all about, it's so much more than some term policy that you got offline for X number of years. It's so much per month. And there's so much more into it. And that's why it's critical. Get a financial plan. If you don't have somebody to talk to us. We can help you out. Mention the show. We'll give you a free financial plan. Do something with it or not. That's completely your call. But don't sit around and just, hope that something's going to magically appear, and, do the homework, do the research, validate what we're talking about too.
Yeah. And just to reiterate that, like for those of you watching that are like, okay, great in concept, but now what? Right? Okay, great. I need to think about this, but now what? That's what we do with Turning Point Group, the company Jon and I are with is, well, Jon's company is we map that out for you. So you don't have to do guesswork. You don't have to, get out a calculator and try and figure it out yourself. We help walk you through every bit of that, of what that looks like for you and your family based on your unique situation. So.
Yeah. And it doesn't take a lot to get started, folks. And here's the deal. If you never get started, you're never going to have anything, period. It's not going to magically appear for you one day. But again, life insurance, educate yourself, ask questions, right? Make sure it's part of your financial plan. Make sure you're not just sitting there with term thinking you got it covered. That's a good place to start, but it's no means the best and end all solution for you and your entire family and what you need. And don't, do the one size fits all either. Get a tailor-made plan for you and your family. Your kids deserve it. Your spouse deserves it. You deserve it. So take the time to get your financial house in order. So we're going to wrap it up with that, folks. So again, great Tuesday conversation, September, Life Insurance Awareness Month. And so hopefully we made you a little more aware on what you can do with the different options in life insurance. So Wendy, it was great to see you. We'll see everybody next Tuesday. Do us a favor, though. If you see that little like button below, give us a heart, give us a thumbs up. And we'd love to hear your comments, too, and give us some feedback on what you'd like to hear or a topic you'd like to talk about. And maybe we'll get it on the air for you. So join us at blackswanmoney.com to watch all of our back video episodes, or you can always catch us on your favorite podcast on Spotify, Apple, all of the above. So glad to have you here, and we'll see you next Tuesday. Bye, everybody.